Could a war between Russia and Ukraine derail the stock market? That's going to be the topic of today's video. Okay everyone, if you're a high net wealth individual or an expat in particular, go over to adamfayed.com and see how I can help you. Now on this video I'm going to talk about a possible war between Russia and Ukraine. Now personally I don't think it's going to happen, but let's say if it does happen, which by the way there is a very real chance it could happen, would it affect the stock markets? And the simple answer is, if you look long term, the answer is usually no. In other words, historically, markets don't usually react to geopolitical events. So for example, markets went up during the First World War, despite the fact there was the Spanish flu. They went up in 2018, despite North Korea and the US looking like they could go to war. They went up during the Russian invasion previously of Crimea. What's more likely to disrupt markets are things like interest rates. So something like interest rates, if the Federal Reserve was to increase interest rates to 10%, for example, very unlikely, that's much more likely to affect markets because that's something which is actually changing the fundamentals of companies. If you think about it, right, if Russia goes to war with Ukraine, even if it results in sanctions or whatever, that's not going to affect most diverse companies around the world. It might affect some Russian banks if they cut off the SWIFT system or whatever, but it's not going to affect Apple, Amazon, and many other companies around the world. Yes, markets might go down or up for that matter, on the news, but that doesn't mean it's going to affect anything long term. Omicron is another great example of that, or indeed COVID. Markets panicked twice. With Omicron, it was only a small 10 or 15% dip, then markets soared. These things come and go, but when it comes to something like interest rates, that's something very different, because obviously if the Federal Reserve increases interest rates a lot, then suddenly people aren't losing to inflation in the bank. I don't think that's likely to happen this year. I think the interest rates will go up, but going up to say 2% is not a big deal. So in 2018, the US central bank increased interest rates a couple of times and they went above 2%, but actually markets hit a record in that year during that particular turbulence. It was only later in the year that markets actually fell. So I don't think small increases in interest rates will make a difference. I do think if the Federal Reserve or indeed central banks around the world really dramatically hike interest rates in a few years' time, that could affect markets. But having said that, those things have affected markets throughout all of history. So if you look at the 65 to 82 period, where stock markets didn't perform particularly well, bonds paid a lot more than they do now. Cash in the bank paid a lot more than it does now. So obviously, if something like that happens again, which it might do in our lifetime, where interest rates skyrocket and bonds pay much more than they do now, obviously a sensible investor will want to get more access to fixed income and diversify their portfolio. But right now, at the end of the day, if cash in the bank is paying 0% and inflation's of 5 to 7%, that's not that much different to if cash suddenly pays 2% and inflation's of 3%. You're still losing to inflation. What will change is if suddenly cash in the bank pays above inflation, and especially if it pays 2 or 3% above inflation. That would make a huge difference. So going back to say 2000, when the Nasdaq was crashing, you could get 6% or so in some forms of government bonds when inflation was only 2 or 3%, and you could make sometimes 3 or 4% in the bank. Likewise, in the UK, before the financial crisis, you could make up to 6% in the bank when inflation was at 2 or 3%. That is something meaningful. But if interest rates go to say 2% or 1%, I don't think that makes much of a difference. There'll be speculation and some market volatility, but I personally think this year, nobody knows about the markets. Nobody knows for sure what's going to happen, but my best bet is this year, markets, including the dividend yield, might go up by between 8 to 10%, 8 or 9% is the most realistic, but there'll be 2 or 3 periods like now where there's kind of market volatility. Again, that's just an estimate. Markets might go up by 20, 30%, or they might go down. But the dividend yield is 1 or 2% in most markets now. The earnings growth of companies is typically 6 or 7%, or sometimes a bit higher. So that's the most likely outcome. However, the best bet, as always, is to be long-term. Don't look at the news. Don't assume something like Russia is going to kind of affect markets, because at the end of the day, stories like this, they come and go. There'll always be stories like this. Just look at the last 10 years, how many potential wars there's been, the Greek crisis in the Eurozone. I mean, I'm reading a book right now from the former Greek finance minister, and people forget how big a story that was in 2012, I think, in 2015. But these things come and go, pandemics, new variants or whatever. So you're going to have to deal with these things as an investor, because in the next 10 or 15 years, I don't know what's going to happen, but there's going to be so many stories like this. It's better just to ignore them and be long-term orientated. How can I help you? In two ways. First of all, are you an expat, a high net wealth individual, or just somebody who lives in a part of the world where it's difficult to get access to quality investment solutions? In which case, go onto my website on adamfayed.com and find out more. If you don't fit into any of those categories, then in which case there's a range of free material on my website, on this YouTube channel, and indeed on my Quora, where I get over 200 or have received over 231 million views in the last few years. And finally, if you want to actually read my thoughts in more detail, go onto Amazon and find my book on there.